Hi there and welcome to ET Now. I'm Ashwin Mohan and you're watching Amicus Curiae. This week our lens is on the tax implications post the government's demonetization move which shook the nation. But before we get into the nitty-gritties of some of the recently amended tax laws, we thought this week it was important to get a global voice on the show, a global tax voice, because of the unprecedented nature of the move that has been undertaken by the Modi government. And the global voice that is joining us exclusively this week is John Wonfor, Global Tax Head at BDO International. John, thanks so much for dropping by. What do you make of this sudden move by the government to roll out demonetization in an attempt to curb black money in India?
Well, it's an interesting question. What's happened in India, from my experience, is a very unusual thing. Demonetization is a pretty radical step to take to weed out underground money in the economy. I think in the short term, and it's just my observations, I think this must present some economic challenges for India in the short term. Consumers don't have money to spend right now. I understand that it's challenging to get money to spend, and so therefore I would expect some short-term economic pain in India, particularly in the small business sector, which I understand is very, very much historically been a cash-based type of business. I certainly understand what the Indian government is trying to do, and I certainly agree that the Indian government, like all governments around the world, need to tackle the underground economy. Even in more mature economies or Western economies, the underground economy does present a significant challenge, and the use of cash in an economy does usually result in some underground economic activity. So the steps you can take to eliminate the underground economy and encourage taxpayers to be tax compliant are positive. But I think some of the ways to do that would be to have fair tax systems, rates that don't have too high tax rates, because that will encourage taxpayers to become compliant. If tax rates gets too high, that drives some taxpayers underground. Have appropriate voluntary disclosure programs to encourage taxpayers to become compliant, and encourage an economy to become a much more, in a lot of countries, a much more cashless society using electronic methods of payments and things like that. That will help in the long term, I think, in terms of eliminating non-compliant taxpayers, eliminating tax evasion in the economy. Demonetization, though, if this happened to us in Canada, I think there'd be a huge outcry, just like I think there has been a huge outcry in India. I can't imagine what it's like here right now in terms of, I imagine just a bit of a chaotic time right now for India, from the fact that I understand 85% of the cash that was in circulation overnight became worthless, and that must represent some very big challenges.
John, fundamentally, even though many overseas jurisdictions may have moved faster to cashless transactions, many back home in India believe that a majority of the black money in India is parked not in cash but in real estate and in gold, and therefore they believe that perhaps the government is barking up the wrong tree. Do you concur?
That's an interesting question. I think you're right. In a lot of economies where there is criminal activity, money makes its way into other types of assets. And certainly in India, real estate and jewelry, gold and other forms of jewelry are where people maintain wealth. I think certainly in terms of, I don't really have any comments with respect to jewelry and how to tackle that issue. I think that is more unique to an economy like India, where people store their wealth that way. In terms of people putting money into real estate transactions, and that's something, for example, in Western economies where governments have spent a lot of time ensuring that there's proper reporting of those real estate transactions, there's proper reporting on the income earned on real estate, there's proper reporting when there's been dispositions of real estate, acquisitions of real estate as well. So the government has a lot more information to understand where the source of funds came from to purchase that real estate, and to track the money as it goes through different forms of transactions relating to that asset. So You're right. If you just focus on cash and not other types of assets, I think you have still some potential for problems going forward.
Now, John, recently India had come out with an income disclosure scheme, and that scheme was widely publicized. The government wanted people to come forward. It gave them that one window to come forward and declare their black money. And in fact, the tax rate that was imposed for that particular disclosure scheme was 45%. And of course, the government promised that confidentiality of the declarants would be kept in mind. Now, looking at the era post-demonetization, what the government has done is that it has given yet another chance. But this time, of course, the tax rates are high. There's also a surcharge plus a penalty. How do you look at these tight tax provisions that have been introduced by the government?
Yeah. So the one thing I'll make clear is I'm supportive of voluntary disclosure schemes. I think they're a very practical way for governments to encourage taxpayers to come forward and start becoming compliant with the tax system. Many countries around the world have voluntary disclosure systems in their tax system as permanent parts of their system, and I think that they do help encourage taxpayers to become compliant. Generally, the way a voluntary disclosure system will work is that if you come forward, you need to pay the tax, you need to pay the interest of the tax. There might be some relief on the penalty, and usually there's relief from criminal charges with evasion. But the key is the taxpayer must come forward, not that an audit is begun against a taxpayer and then they decide to disclose, because then obviously it's not really a voluntary disclosure. I think the Indian government needs to look at their voluntary disclosure scheme and say, will this encourage taxpayers to come forward? I think people are realizing in today's world it's becoming a much more transparent world where government is having more access to information on taxpayers, and governments are looking at risk in the economy and looking at taxpayers where they see possibilities of non-compliance, and they will take a closer look at those taxpayers. I think those taxpayers need to feel the heat a little bit, and therefore hopefully they will come forward before the government goes on them. Some people would argue that voluntary disclosure schemes aren't fair, because if somebody's been committing tax evasion, why should the government be lenient? I think the best answer to that is, you want a very practical way to get taxpayers into the system to become compliant. And therefore, you need to provide some incentive for taxpayers. It's just a very pragmatic way of doing that. But if you have a system that makes it too tough for taxpayers to become compliant, then you're going to drive them further underground, and I don't think that's healthy. I think you want to have a system that encourages encourages taxpayers to come forward. So the current system, if it's becoming too tough, I think the government needs to re-examine that.
Point taken, John. Now, how have other overseas jurisdictions battled this menace of black money? What are some of the measures that they have ideally taken, and how are they different from what India is attempting?
Yeah, so I think there's a number of ways that governments have and continue to battle the scourge of black money. First of all, it happens at very basic levels at the audit. Governments look at the risk areas in the economy where there is a lot of tax evasion. And I'll give you an example of, in Canada, perhaps the renovation industry or the construction industry has been an area where historically there's been a lot of non-compliant taxpayers, people doing projects for homeowners and perhaps doing it under the table sort of thing. Governments have introduced reporting systems aimed at particular areas of the economy to ensure that there's a reporting mechanism so that payers for those services have an obligation to report to government. It's not just the person who's earning the money, but the actual payer of the service has an obligation to report money. So that's one way the governments can do it. So they'll tackle those non-compliant areas of the economy. The restaurant business in North America is another area where there's traditionally been non-compliant taxpayers, a lot of cash type of transactions, and that where perhaps the credit card receipts are reported for tax purposes, but maybe not the cash sales. And therefore, they spend a lot of time in audit activity targeting these particular sectors to find the non-compliant taxpayers and publicize the results of that, because when they publicize the results and the efforts that they're making, that encourages other taxpayers to become compliant because they don't want to fall into the same trap. That combined with voluntary disclosure programs, which are there for, hey, if you haven't been compliant, we'll give you an opportunity before we come and audit you to become compliant. And I think you're seeing evidence of this around the globe as well. There's much more disclosure requirements in tax legislation around the world, particularly as it relates to offshore assets. In Canada, in the United States, in many jurisdictions, there are now reportings required if you have a certain amount of assets offshore, and the penalties are substantial if you don't report them, whether those are legitimate assets offshore or not. And this gives the government a way to try to tackle this type of problem.
John Wonfor, Global Head of Tax, BDO International. Thanks so much for dropping by and sharing your thoughts on amicus curiae. On that note, we'll have to slip into a short break, but don't go anywhere, because on the other side, we get you a perspective from back home on some of the nitty-gritties when it comes to the amended tax laws post-demonetization. Stay tuned.